morning, I hope you're doing well. I just made this video, but my microphone wasn't plugged in, so it's the second take of that video. So my first video was basically just saying, we got that technical flow for a softer dollar. We've also got the fundamental rationale for a softer dollar, because this is absolutely guaranteed, the 25 basis point hike, unless Powell says something tomorrow, which is probably likely. It's going to shift the sentiment on the big fish sentiment on the USD. That's not going to change now. That's set in stone. But what Powell says tomorrow is going to shift this a lot, probably. Okay, so we've got that. We've got the technical, and we've got the fundamental, and then we've got the sentiment and the fact that they've gone long. So the dollar yen might have not been the greatest trade. It was a bit of a poor entry. Could have waited for a retracement and then looked to long. But we have to remember, all those justifications and the logic for a softer USD. So there's the sentiment. They've gone long, so price should be falling. That, and also the technicals as well. AU is worth noting, actually. There's a bit of softness in the Australian dollar. Now, if this does perform poorly, it's going to hurt our trade of the day. Okay, and our trade of the day is a risk-on signal, so it's possibly going to be a poor signal today. Okay, so be careful. So just a little bit of background for USD, and just to say, in my first video, I'm tired because I stayed up late watching dollar yen, and of course it went against us and inevitably stopped us out. And what's happening now is the UJ is pumping a bit. So I wonder whether or not it's looking at the PMI, because we've got Eurozone, UK and US PMI. It might just be rallying a little bit because of that, potentially. And there's our S&P on the daily. You can see multiple supports, resistance, supports. And the thing is, they're short nearly everything, but they're long dollar CAD, dollar Swiss, dollar yen. It's a bit crazy that they're selling everything, but that's just the herd for you. S&P potentially making a sell here. We might be getting a crossover. If we do, we can mark a box on this candle here, and that would be a resistance, because that's where they've gone long on a dynamic perspective. Okay, this is the flow of their money and the flow of time and their positioning. So if they do go long against the moving average, we can create a box here. So that's it's looking bad for our trade of the day if this falls. Okay, so just be careful, and don't forget you can just monitor, and it's probably better to place orders as well. If we'd placed orders on dollar yen, it would have got us out of that that loss essentially. If we placed an order to buy lower down, then our stop could have been tighter and we could have got a better risk to reward. But we'll talk about dollar yen when we get there. And yeah, so we're potentially going to get a sell on Dow Jones if we get the crossover. So that's a likelihood, potentially. If so, we can create a box on this candle. Okay, and that'll be a resistance. Right, so hopefully that's clear. DAX is probably just going to join the US. They've gone long, so we should be falling. Resistance zone here. The fact they've gone long, so they got punished, and it'd be unusual for them to get paid. They went long again here, so we can create another box here. In fact, here, hopefully that makes sense. They've gone long, so price goes to punish them. Gold, absolute roller coaster. The break even is 1830 for the bears, and the bulls break even is down here at 1911. So these guys here, the bulls, are really getting paid, but the bears are getting absolutely destroyed. So really, we should see the bulls and the bears at a loss. So currently, the bulls are making profit. So that's a little bit of it's a bit of an indication that we can potentially fall, because they shouldn't be profiting. The retail traders shouldn't be making money on average. So we should be coming down to their break even. So we'll have to wait and see there. But we do know that we made a buy, and you note that the volatility would have increased a lot. So it really did a scare tactics. And it probably encouraged new bears to enter. They saw this price action and was going, oh, that looks quite good. They're thinking about profits, easy money. Of course, rug pull, up we come. So it's a good idea to get an ATR indicator. If the volatility is pumping, it looks like it's a scare tactic and it wants stops. And there was no doubt some stops down there, which we would have covered on the Patreon video. So EU is falling, but we had the PMI data. Okay, so that's the logic for that. Sentimentally, it was a buy, but we have to remember the PMI is quite a strong high severity data release, so that's going to impact things. So we shouldn't be falling sentimentally, but perhaps the PMI data was a lot worse than expected. And so that's that, okay? Dollar yen, and the thing is, this should be falling and EU should be rising. So a little bit out of bonk. So today I'm going to be on monitor mode, I think. And I think that's the best plan of action. And we might be seeing a reversal, yeah. So how sustained this will be, we'll have to wait and see. But Australian dollar was the first one to fall. So that's going to be the weak link. So that might be useful for you guys. If you've got some spare time, watch AU. That might be giving us clues, okay? So hopefully you can hear this microphone. And that's the second take. So hopefully that was okay. Patreon video now, and I'm just going to be taking it easy because I'm really tired. So I'll speak to you guys soon.